Meta stock surged 21% in 3 weeks. Shea Ballure calls it the market's latest darling. How many of you think Meta is a darling? I'm almost scared to get those answers from the group here. Meta Platforms, ticker META, has officially transformed from a cautionary tale of extreme capital expenditure into, quote, the market's latest darling, end quote. That's following a rapid 20.97% stock rally in roughly 3 weeks, driven by a radical shift in how Wall Street values tech giants' artificial intelligence infrastructure. Between late June and mid-July of 2026, Meta experienced a blistering market rally, with its adjusted closing stock price jumping from $542.87 on June 25 to $656.73 on July 13th. According to market strategist at Futurum Equities, Shea Ballure, this sudden change occurred because investors are no longer in panic mode over Meta's aggressive 14 gigawatt capacity targets. Instead, the market now understands that Meta has, quote, multiple ways to earn a return on that infrastructure, end quote, rather than relying entirely on advertising. Wall Street previously viewed Meta's AI investments, such as its $50 billion plus Hyperion data center expansion in Louisiana, as a risky cash burn. Now, Ballure notes that clearing up this gray area of infrastructure financing has allowed investors to re-rate the stock at a higher valuation multiple. So let me pause right there. Joe, doesn't this kind of answer your question? Seems like the infrastructure impact on IBM seems to be localized, whereas here in Meta, it's actually being cited as a positive. I think that is definitely going to continue. Thank you for adjusting right there. I just love when you do that. I just absolutely love that. Just got to keep me on my toes in the morning. A major catalyst for the rally is Meta's transition from announcing infrastructure to demonstrating real product releases. The recent launch of the Muse Spark 1.1 model and its associated API represents Meta's first significant step towards external AI monetization. By pricing its API at roughly 20% of the cost of competitors like OpenAI and Anthropic, Meta is aggressively targeting developer adoption. Furthermore, Meta is increasingly controlling its compute architecture through custom silicon, notably the new Iris chip. Ballure argues that even a partial shift towards custom silicon will materially lower the blended cost of compute and improve the overall economics of Meta's data center spend. Looking ahead, Ballure highlights Meta's potential to rent out excess or older generation compute capacity to third parties. While Meta may not instantly replicate Amazon Web Services or Microsoft's Azure, its ability to turn infrastructure into a direct revenue-producing asset is viewed as a free call option for the stock. Armed with an enormous install base of billions of users, Meta can deploy AI model improvements instantly, creating a moat that makes it increasingly difficult for yesterday's AI startups to compete. So has the thought actually changed here on Meta? Are you more bullish on this now? Have you always been bullish? I mean, I wish we had Lion here. I know we've talked about Meta quite a bit. All right, how are we doing on time? We're doing all right on time here. I'm going to roll through a couple more stories. I know we're also expecting that CPI print. I got my eye open for it, so we'll bring that to you. And we're also expecting a guest at the same time. We'll make sure we get it all done here.